this not extend? We have a problem.
Whoops, something's happening. What are you seeing the roadway? The curvy road?
Just say hi and tell
Hello. We're working through some technical challenges here. Nothing that our crack staff of highly paid, smart, handsome, and funny staff won't be able to figure out. Welcome. There's always something to work out in the first go round. And Matt is saying, hey, asking us if the streaming has started, and now we are live, and I can see from Matt that he can see and hear us. So thank you all for being here. While we sort through a few things, obviously you caught the fact that we had to throw a little bit of a curveball at you with the change in the link here. And so thank you for joining. I see that we have yet a bunch of people to hop on. And so we're going to kind of stall for a minute or two while we sort through this. Would say that this is our first go around. And so there are a few kinks that we're working through on our end, planning on doing these on the second Tuesday of each month. Have a schedule which we'll go through later on future events. Also would say that in the event that we don't get to all the questions today, and there is plenty of room for questions in a bit, but in the event that we don't, please reach out to us and we'll make sure that we get to as many of those as possible. If not today, to get to those after the fact. Looks like we have a big chunk of folks here, but we still have a lot more to come. So bear with us for a moment or two while we're sifting through items. Our crack staff is doing all that they need to do. Mr. Staff, how are you doing today?
Sweating at this moment.
Sweating at this moment. And how much time would you like us to wait for another couple of minutes?
Talk about the series a little bit. Talk about
Okay.
the next
All right.
one coming up.
All right. So a couple of things. First of all, this is brought to you by Lessons from the Garage. Sort of think of a Netflix for entrepreneurs and decision makers. And you get to connect to folks, experts that are in the Lessons from the Garage library. And so not only do you get to hear from them through the library, but you can access those individuals by having a subscription. So again, Lessons from the Garage. Currently, there's about, as I recall, 200 to 240 titles, probably be over 300 by the end of the year. And so it has been a labor of love on our part from the Network Connect in pulling this together, as well as through Club Entrepreneur. But again, think of Netflix with a variety of different topics to help you grow and make a more profitable company. It's a free trial, 7-day subscription for those of you on the call today. And again, you get a chance to check it out for 7 days and dive into all the titles and experts that you can access through the Lessons from the Garage. Likewise, Lessons from the Garage can be followed on Facebook, Twitter, LinkedIn, and Instagram. So check us out and follow us on all of those locations. As far as our sponsor today, Schweigman Lumberg Woosner, and for those of you who aren't aware of SLW, website's slwip.com. Schweigman Lumberg Woosner is an intellectual property law firm doing work on both the hard side of the IP world, patents, but is on the soft side, trademarks and copyrights as well. Schwegman Lumber Woosner's been a longtime sponsor of the Network Connect, who in partners with the Lessons from the Garage is bringing you today's event. So we appreciate the support from SLW and their ongoing participation. So thank you. I also would say that I've done work with portfolio companies through SLW since going back probably about 20 years ago or so. So again, we appreciate the support from Schwegman Lumber Woosner. And to learn more about them, you can check out SLWIP. And so thank you again for being here today. I can see folks trickling in or buying a little bit of time as we had to jump through a few technical hoops, and appreciate you joining us. Again, the event today is brought to you by Lessons from the Garage, and have a broad library of how-to tools for folks trying to grow their business and make a more successful and profitable company. Mr. Scott, how are we doing on the technical side of things?
Well, you've covered all the material I was supposed to play first.
Okay, so we
And
can
it's
save.
not working. Let's not.
Okay,
waste
let's
any time.
skip that.
Yeah.
All right. So, we ready to rock and roll?
We are, sir.
All right. Well, why don't we hop to the presentation then, if you will? You on it? All right. Okay. 10 things that I've learned from 30 years of investment banking, investment research, and venture capital. We're going to spend, I was originally going to spend 10 or 20 minutes, might shave it down to about 10 so that we leave ample time for our questions. The intention here is to share some of the high level learnings that I've had, and kind of the bow that wraps it all together is, at first I was doing studying companies and assessing them and determining which stocks to buy or sell, and helping folks determine what stocks to put in their portfolio. Then I went on to investment banking, structuring transactions, raising money, selling companies, and doing venture capital deals. And then I've had 3 stops in the venture capital world. First with a big fund where I was a junior guy. Then I did a small fund with a couple of other guys, with 3 of us Sherpa partners, and then started my own business a little over 10 years ago now, and have been working on venture capital stuff on my own. So from a background perspective, again, I think the highlights here, takeaway was Norwest Venture Capital, going on to Sherpa Partners, and then more recently, my own firm, Brimacombe and Associates, and Brimacombe Capital. As we dive into the 10 items of, hey, what did I learn through events that either worked or didn't work? I think that, again, boiling down from a lot of years and high points and takeaways of deals that both worked as well as didn't work. All right, number 1, you want to have a must-have versus a nice-to-have. And to the extent that you can position your product with your customer set, the more critical you are to their needs, the more luck and opportunity you're going to create for yourself. So again, think of yourself from their perspective, and how do you make and or position and or market yourself as a must-have versus a nice-to-have. Way to look at that from kind of a movie perspective. Think of the Hurt Locker in a bomb suit. That is kind of the ultimate of a must-have and solving an explicit need. That being, hey, if you're going to go out in the field and try to defuse bombs, you definitely want to have a bomb suit. For those of you not in the med device world and not selling a life or death product, sometimes this is a little bit of a marketing challenge, but nonetheless, think of yourself from your customers as to how to have a must-have in their eyes versus a nice-to-have. Okay, number 2, and moving on, in the world that we're in right now, where there is so much noise, a lot of stuff happening, tough to compete for attention. There's a saying from an old a venture guy that I was doing deals with a long time ago. Being wrong and being early look exactly the same. Again, let me restate that. Being wrong, completely wrong, 100% wrong, and being early look exactly the same. So when you think of your business and what you're doing, what are the data points that you can show some traction on? And traction doesn't necessarily have to mean revenue and or customers buying what you're selling, although that's obviously positive. It can be a number of other items as well. So think of traction as a way to reduce the concept or the risk associated with folks as they think of saying, hey, are we wrong? Are we just too early? And so that is a major threshold to get over as it relates to the investment community. Okay, item number 3, and for those of you in the local basketball community, you'll know that De La Salle won 6 straight state titles, and my son happened to be on a couple of them. Title number 3, so that's him right there in the middle. And when they were taking pictures, key advice to him was, Eli, get right in the middle or grab the trophy, one of the two. All right, so the market is going to talk, and you can go through all the due diligence you want. You can go through all of the checklists and check boxes and all this work, which obviously is a plus, but the market is what's going to talk, and the market will buy when the market's ready. So the due diligence and the efforts on your part, certainly positive. Do them, work through them, have answers for the investor community, but know that you need to be listening to the market, adapting to what they say, keeping your ear to the ground, and following their lead. And you're going to learn more by the market interactions and tweaking your offering and going towards what they're suggesting you do and so forth. But the market is definitely going to dictate what happens. All right, so number 4, talked about De La Salle having 4 straight state titles. Eli listening to his dad on both fronts, and this part standing both in the middle and holding the trophy. So item number 4 of our list of 10, employee engagement is all about culture. And we hear a lot of stuff about culture, hear a lot of speakers, a lot of readings, and certainly culture drives a lot of things, but know that your engagement is going to come from culture. In fact, Schwegman, Lumber, Woosner, very strong corporate culture. We're here at Irish Titan today, a wonderful corporate culture. Follow the leads of both of those companies and you'll do well. One thing I'll add specifically to the culture and being important is the most successful companies have a sense of urgency to them. And so part of that corporate culture is that sense of urgency. And I guess I would ask you for yourself is, do you personally have a sense of urgency? Do you manage your company with a sense of urgency? And if somebody brings something new to your attention and they either learned from listening to the customers and brought something to you, or did you hear something new, or did they bring something in the product that they wanted to show you, and then you say, hey, I'm really busy this week. How about, next Tuesday at 2 p.m? Well, if you're driving your business that way and pushing them off, then you yourself are not moving with enough of a sense of urgency. So I'd encourage you to think about how do you add a sense of urgency to your own way you run yourself, run your schedule, and run your company. Okay, number 5. Being Scandinavian, I can make fun of us and a tendency maybe to be understated and not do things as big as possibly they can be. And number 5 here is aim high, because if you aim high, you still are going to win a trophy and do well coming in for second place. Whereas if you aim kind of middle of the road and you don't achieve your objectives, that's going to be a mediocre outcome. And I would encourage everybody, especially here in the upper Midwest with that Scandinavian thing going about being understated and maybe not wanting to ruffle too many feathers or aim too high, to aim high, because second place is still going to be good. All right, number 6. as we roll on to number 6, think of how people make other people feel. There's either two ways that somebody makes you feel or you make them feel. On one far end of the extreme is nervous, and on the other far end of the extreme is at ease or comfortable. And that is a definite learning from my part, in that companies, especially early stage companies, need to recruit, they need to raise money, they need to talk to the press, they have to do a number of different things. And if you're not making people feel comfortable, then you are not going to do all of those things as a business leader needs to do. And so how are you feeling, or how do you make people feel? Do you make people feel comfortable or nervous? And I've seen many high quality products or services in those companies not doing well because the management team does not exude enough confidence and comfort to their audience, and therefore it makes a more challenge to recruit and so forth. All right, number 7. Selling is very complicated. Most people come to a company from a product or technology perspective, and they don't come at it from a go-to-market or a marketing or selling perspective. And I think those things get shortchanged. Myself, I came up through the ranks as a finance guy, and I always thought if I knew the numbers, that everything else would take care of itself. And I guess over the years, I've seen the go-to-market strategy be kind of the weak link in the chain. And instead of having the best mousetrap, the best product, and people are just going to come flocking to us, there's too much friction in the channel. They don't understand the go-to-market strategy, and therefore things kind of fall down. And so I'd encourage you to get help both either from inside the company and don't shortchange that category, or go outside the company and get expertise from trained professionals on the distribution side, and don't have it be, hey, we're leading with the best mousetrap and therefore everybody's going to flock to us. All right, number 8. Management teams that learn the most are the ones that listen. And the folks that aren't listening aren't learning. And the listening comes not just from the marketplace, as we talked about earlier, and the market buying when they're ready, but people that listen to their customer sets, people that listen to their employees, people listen to their advisors, their service providers, anybody that they're interacting with. They should be taking a mental checklist on those things, because the teams that learn have it be from listening and getting that from folks that they interact with. And the equation here, listening equals learning, I'd encourage you to have as open of a mind as you can have, because the more data points you gather from, again, either the market or your advisors or your team, anybody who's willing to give you feedback, especially at the earlier stage, you want to tap into and incorporate that to the best of your ability. All right, number 9, as we go forward, for an early stage company, I know that a lot of folks get hung up on valuation. Old saying that dilution happens just like shit happens, just like so we had to jump through some technical hoops on the front end of today. And so I'd encourage you not to get hung up on valuation. I'd encourage you to do what you need to do to raise the capital and move your business forward. And if that's the case, things will take care of itself. If the deals have success, if the companies have success, everybody makes money, whether it's the team, whether it's the investors, or any of the other service providers that have invested as well. But if you get hung up on valuation and you push things off and stuff doesn't happen, valuation can get in the way. So just like shit happens, valuations happen, and don't get hung up on that. Last thing to watch out for is the shiny object syndrome. And you want to focus, because it's easy to get off track. And so the shiny object syndrome, I'd encourage you to divert all of your valuable resources because there's never enough time, never enough money, never enough people and staff to get stuff done. So focus on what's most important to you and don't get hung up or tricked into chasing the shiny objects, just like you don't want to get hung up on the valuation. All right. So number 10, and the last of our top 10 list, and then we'll get to 10 items on takeaway as far as actually nuts and bolts of raising capital. Number 10, focus on what you can control. A lot of people focus on things they have no control over, whether it is the market, whether it is the customer set, whether it is interest rates, whether it's the weather. And, we got another tsunami happening here over the last 24 hours and the roads. But if you focus on what you can control, things will work out. Too many people get hung up on trying to do things that they have no control over. And I would always say that whether it's fate or serendipity or higher power, whatever you want to subscribe to, things have a way of happening. And if you focus on what you can control, life will take care of you and your energies will be well spent. Let's see, Scott, you want to hop over to that picture there? Leave people with our little crystal ball on the fate. All right. So again, fate, serendipity, higher power, whatever you subscribe to has a lot to do with success. I made an investment in January of 01. Never forgotten this. Stock market had cracked in 2000, but basically was going sideways. I make this investment in 2001, January. The company is selling product into the financial services segment. Financial services go into lockdown and nothing happens. And it was just like going into Death Valley. However, the fate, serendipity, higher power was the market tanked in April. And if I had just waited 3 months on a little longer due diligence checklist or what have you, wouldn't have made the investment. And so that's been the lesson I've taken with me all these years is, again, there's a lot of luck that has to do with these things. And so, again, focus on what you can control, let go of the rest, spend your energy on the things that fit and are most important to you. All right. So what have you all learned? We'll get to some questions here in a couple of minutes. Let me go through one more list of top 10 items. I consider this a capital raising audit. And so if you think of that, all right, here's 10 ways. Those were kind of lessons. What did I learn from deals that worked and didn't work? Here's 10 things that you can take with you to help you raise money. All right, number one, you want to have the best possible presentation materials. My two favorites, and these are standing long-term favorites, Guy Kawasaki, the 10, 20, 30 format, and then something more recent. And for those of you who don't know, SlideBean is a service provider that takes your presentation and for a fee improves on the look and feel. And if you look up on Google or any other search, if you look for the Airbnb pitch deck teardown done by SlideBean, you're going to see a wonderful, wonderful deck. So these are like my two go-to templates. And so if you are looking to have standout materials, I'd highly encourage you to go to either one of those or take a combination of both. And those are my favorite. And I'll send anybody who I think their materials are less than stellar to look at those two. So number one on the checklist for an audit on raising capital is standout presentation materials. Number two, have an appropriate risk-adjusted valuation and terms. Too many people, this goes back to the getting hung up on valuation. Too many people are looking at trying to, quote unquote, make a killing on this current round of fundraising, and they price their transaction inappropriately relative to the risk. Likewise, the terms may not reflect an adequate number of or an adequate assessment of the risk. And so first item, hey, if your materials are bad, you're not going to move very far. Second item is your deal's structured wrong or valuations off. And both of those are deal killers, and you just shoot yourself before you even get out of the gates. All right, number three, emotionally and engaging and marketable story. Too many folks, and again, this comes from people leading with their product. They lead with the best product, or they perceive what they have to be the best product, or they lead with kind of this better mousetrap approach, and they aren't selling emotion, and they aren't selling something that's very marketable. And so I would ask you, what kind of emotions do your pitch deck engage? And if you think of human nature, again, going back to putting yourself into the customer's shoes and or your investor's shoes, too many people are selling feature function and technical things, and there's not enough of an emotional connection with the story. And so think of hooking them meaning the investors, emotionally, and then backfilling with the facts and details and features and so forth. And so this gets lost all the time. And if you look for deals that either raise capital or groups that do a pitch competition, and the companies that win, almost always you'll see the companies that win or finish near the top are the ones that have the most emotionally compelling story. So don't just think feature function when you're selling, think emotions and engaging with your audience. And in this case, the audience is the investors. Okay, number 4, domain experts. Not to say that you can't go into a market that you yourself is not a domain expert, but you need to supplement your own skills either with people from the industry that you bring into the company, or an advisory board that can help advise you, or you need to become, by tapping into that community, an expert on that customer set. Domain experts can go a long way in helping the business get funded. And if you don't understand things like the selling cycle, buying cycle into that marketplace, if you don't understand what the hot buttons are, then you need, again, to supplement your skills. And so I'd ask you the question, who's the domain expert on your team? Not just about the product and the technology, but in particular, the customer set. So who's the domain expert? All right, number 5, fundable team. Investors, as we talked about, same as the customers, are either going to feel confident and comfortable about you and your team, or they're going to feel nervous and uneasy. And so to make them feel confident and comfortable, look at your team from an investor's perspective and think of, do you have all the right pieces of the puzzle? Again, they don't have to be just a internal full-time team, because a lot of you might not have the money to do that. But it could be the advisory board, could be the more formal fiduciary board. But ask yourself, hey, is my team fundable? And if not, how do I supplement my team to become more fundable? And gentleman that I was interacting with a couple of months ago, looking at hiring somebody for a position, and I said, hey, would you want to stand in front of the room either to try to raise $100 million from venture investors, or stand in the front of the room at an IPO roadshow with that particular person in that role? And would that make the investors feel comfortable and confident? And the answer in that instance was no. So he didn't get hired at a C-suite level position. That person got hired down a rung. Nonetheless, good addition to the team, but not somebody necessarily that could build an investor being confident and comfortable with funding your team. Number 6, managing ongoing financial risk. And how does that fit into both near-term and long-term financing needs? There's a couple of different ways you can play this. Number 1, I really like when companies can stage their financing. So at X million dollars, or X $100,000, or at X tens of thousands of dollars, you can do A, B, and C. At some number larger than that, you can now do D, E, and F. And at a full raise, you can do X, Y, Z. And so those companies can manage their ongoing risk because they have contingency plans based on how much money they raised, and based on milestones and hurdles for various funding amounts. Likewise, can your business build itself through a consulting business, or selling kind of first phase of product number one. But if your pitch to investors is, hey, we need blank tens of millions of dollars, and if we don't raise blank tens of millions of dollars, then we aren't going to be able to accomplish what we're trying to do. That's just tough, especially here in this part of the country where financing is a little tighter than other parts of the country. Velocity of money's a little less. Risk tolerance might be a little less. And so managing your ongoing financial risks, in particular by staging what you're doing, is a trick and a valuable way to get funded. All right, number 7, pick and recruit your investors. It's not a matter of just getting any investor. It's a matter of getting the right investors. So network early and often. You want to get out and meet people before you need their money. You want to make relationships with folks before they need their money. And you want to try to add value to their universe such that you're not just saying, hey, next week I need to make payroll and you need capital from them. How can you add value to their portfolio? How can you add value to the types of companies that they're looking for? What kinds of information can you share with them? And likewise, are you a fit with their needs, their investment profile? Different investors like different things, and you want to make sure that you match up with what they're looking to accomplish. All right, number 8. Back to kind of must-have versus nice-to-have. Talked about this a little earlier. Important enough to make both lists. I would encourage you, as you look to market your business, market your product, is try to bucketize what you're doing such that you can get as close to a must-have, whether that's a, hey, you're going to die if you don't have my med device, or whether you're the bomb suit from the Hurt Locker. But how close can you get to a must-have versus a nice-to-have product or service? All right, number 9, before I get to this, remind everybody that we're going to go to a Q&A section here in a little bit. So we are monitoring your comments and questions. So at this point in time, excuse me, as you think about what else you'd like to know here, I got 2 more items, but please submit your questions. Type them up, send them in, and we are tracking them. Okay, speaking of tracking, market traction, again, there was a flavor of this on the last list. And market traction, as I said earlier, does not have to mean revenue. Obviously, in the theme of being wrong and being early look exactly the same, revenue is good. Old saying from another venture investor did a deal with a long time ago, are the dogs eating the dog food? You want to be selling to the extent you can, but let's say that you aren't ready to sell, then what are the other things? Is it engagement and comments and the feedback you're getting in the marketplace, whether it's Facebook, Twitter, LinkedIn, or Instagram? Is it the number of people who are sharing what you're doing? Is it the number of kind of vanity metrics like downloads? With that said, are they spending time in what you're doing? And so market traction, critical, but it doesn't have to mean revenue. It might mean articles. It might mean interactions with the media. There are a variety of other things. Saw a question come in, missed the first example of a really good business pitch. Just to reiterate a couple of things. Number 1, you can get these decks from us. We will be communicating how to do that after the fact, but you'll get something from us via email on that. But just to refresh everybody's memory, 2 examples that I think are just rock star, almost a Bible go-to every time is the Guy Kawasaki 10, 20, 30 format and the Airbnb pitch deck breakdown done by Slidebean. So if you look up Slidebean Airbnb pitch, you will get that. All right, so back to number 9, market traction doesn't have to mean revenue. Engagement with the product, engagement with the media, Whatever you can do to build up the case that you aren't wrong, you're just early, you want to do that. All right, number 10. And this is number 10, meaning the best one, product or service that users love. If you're building brand ambassadors and evangelists to promote what you're doing, you've won. And so in my mind, this is the most important takeaway, the most important message that I have to leave y'all with is, what are your customers telling you? What do you need to do to move the needle such that you are not only a must-have that we talked about earlier, but that customers love what you're doing. And if they love what you're doing, they're going to share what you're doing, whether it be with their friends or family or other people in their industry, or they're going to love what you're doing and they're going to share it on social media. You're going to get feedback, you're going to get comments. And so my number one takeaway of the whole day would be, are you listening to your customers, and are you doing what you can to build a product or service that they love? Again, looking for questions and feedback. That is number 10 of the audit of, are you ready to fundraise, and what are the 10 items you need to have to go out and fundraise, which followed the first 10 list was takeaways from about 30 years of doing deals, first as a investment research guy, and then an investment banker, and then a venture capitalist. So a lot of lessons wrapped up into that. I know that we've gotten some comments, of which I can see in front of me. Comments are more about kind of high level stuff than it is a specific question. And we are open and up for business as far as questions.
I have a question.
We have a question.
And very few will come through verbally this way.
Okay. Do you get paid double for the verbal questions? Okay.
How do you find, how does, say, a young entrepreneur who's got something decent find someone to sort of mentor them? How do they go about this and get someone to look critically at their materials and things like that?
Sure. I think that's, while being in the upper Midwest is a little bit of a hindrance when you talk about velocity of money, risk tolerance, how much money's here. Certainly those are a little more challenging than other parts of the country. The inverse of that, though, is that I think people in this part of the country are going to be more apt to try to help people. And so I think the vast majority of the time, if people ask for help, they can find that help. Now, you want to do it in a couple of different ways. I'd encourage people to go out and find somebody that is a domain expert and or right in the niche and or, center part of the bullseye for what they're trying to do. So the person that this entrepreneur reaches out to is reaching out to somebody who truly can help them. If you have a med device product, you don't necessarily want to ask an internet investor for help. Not to say that they couldn't learn, but you want to match that up. Number two, I think asking for specific help, like, hey, would you be willing to look at this pitch deck? Or, hey, would you be willing to spend 10 minutes with me on the phone? Simple things that they can do and work it into their schedule in a kind of manageable way, I think is a positive. Small bites would be way better to say, hey, will you talk to me on the phone for 10 minutes? Or will you take 10 minutes to look at my pitch deck? Then, hey, will you meet me for an hour coffee? Because the hour coffee means you have to drive somewhere for a half hour. You got an hour meeting, and then you got to drive home for a half hour. So that's a 2-hour thing. So better to try to get bite-sized 10-minute pieces. And or if you know that person is going to be at an event, piggyback on that event. Like it's an industry conference, they're going to be there, or a networking thing or whatever, piggyback there. And then the last thing would be, even if you don't bat 1,000, but if you ask 10 people for help in Minnesota, you're probably going to find 7 or 8 that are willing to help you. So if you get said no to once or twice, don't take it personal, move on. And I would just encourage you to say, who are the 5 or 10 most valuable people that could help you? And I would encourage you to go look for those 5 or 10 people, preferably get an entree to them. But if not, generally speaking, in this part of the country, people are going to try to help you if they can. All right, so we got a couple of other questions here. Let's see. question specifically about a category, Matt, you know who you are. And rather than talk to your category specifically, I'm going to just talk to this question more generally. I would say that in every market and in every category and at every stage, there's people are interested in specific kinds of investments, whether it's med device, as I mentioned, or whether it's internet, or whether it's software, or whether it's entertainment, or whether it's financial services. Susan, I see you out there. People are looking for things in your category, and it's just your job to find them. Now, they might not be easy to find. They may not be in our backyard, but they might be in Chicago, or they might be in Milwaukee, or they might be in Denver, or they might be in, talked to a guy earlier this week, I guess earlier means yesterday, in Indiana. So people that are interested in your category are going to be interested in you regardless of where you're at. So I say you got to hunt and work, and it does take some work. Give yourself a half hour a day, hour a day, but you're looking for people that fit with your category at your stage, and they're out there, believe me. So that's just legwork. And Matt, if you want to talk about this at a different time, reach out. Susan talked about question on valuation. That's almost the first question. Okay, here's why it's the first question: because they can dismiss you without spending mental energy on your transaction if you're priced inappropriately. So if you have no traction and you have no validation and you're super early, and then you say, hey, but I got a $20 million pre-money value, they just dismissed you, and they don't have to spend the time wading through your business plan that you spent a lot of time and energy on. That's probably very good, but you didn't price your deal appropriately for the risk and reward profile. And investors, you know, they need to make money. And if you paint them into a corner by putting your valuation too high, you are not going to give them an opportunity to make money. And for some investors, later stage with less risk, that might mean 3 to 5 times their money. For earlier stage people, it might be 5 to 10 times their money. And if your valuation is $20 million and you have no traction, you're not going to get a lot of attention when you tell them, when their first comment is, what's your valuation? You say it's 20 million. Well, you just frankly stepped on your own foot and got in your own way. All right. Talk to me about that after the fact. Let's see. Cold calling and shoe leather. What's the comments on that? Okay. So,
the venture summits.
Okay. Okay, so Alex, I don't know if you're a fisherman, and I'm not a very good fisherman. I've done it a few times. Actually, it is kind of fun if you have somebody to take care of everything. So the one trip that was good was to Lake Michigan salmon fishing, where I just rode in the back of the boat, and there was a guy making the lines work, and you just took turns reeling in the fish. Actually, another trip to Mexico was good. Again, person there to take care of everything. So I guess the lines in the water analogy is it works good when you have somebody baiting all of your lines and taking care of you. And the lines in the water analogy as it relates to raising capital is all of them are valuable. And the venture summit concept, I guess it depends a little bit on how much money it costs and do you have the money for that? And then I would say how much legwork do you do ahead of time? So that's kind of covers both. It's the cold calling shoe leather. But if you make your meetings ahead of time, find out who's going to be there ahead of time and try to get to those folks, it's worthwhile. A little tougher to just show up and kind of walk, blindly through the aisles. But I would say yes to those if you do your front end legwork. The cold calling and shoe leather, I would also say yes to, because it's one line and you're just trying to put as many lines into the water as possible. I would ask, though, to the extent that you can get an introduction to somebody, it's going to work better for you. So better than cold calling and shoe leather, try to get an introduction to a person and then go to the calling and the shoe leather. But I think you have to view the fundraising as all options are good options, and don't dismiss it just because you don't want to spend the time or you don't want to spend the money or you don't want to get said no to because it's a cold call. I think you just need to do everything. All right, next one down. Crowdfunding, how's that fit, and you don't want to be radioactive. Good point. Okay, so crowdfunding, I guess, to me is a little bit more of a marketing exercise versus a fundraising exercise. Generally, you don't see people raise tons of money. I say generally, occasionally there's an outlier with anything, but generally it's more about, hey, how does this help us from a marketing perspective? Can we promote what we're doing in a way that works? If you ended up with $5,000 investors in your round, would that turn off some investors in the future? The answer is absolutely. And so I would view this a little bit more as a marketing exercise. However, and David, I don't know where you're located. Oh yeah, I do know where you're located. I take that back. So it turns out that on March 7th for Club Entrepreneur, there is an event that one can go to. Clube.com is the website to get registered. And you can learn all about crowdfunding and the ins and outs of that. And as long as you are being cautious and doing it appropriately, and also trying to, hey, how do you do this from a marketing perspective and kind of get the benefits of both sides of the house, both the fundraising as well as the marketing, then it's a go. And learn more about that on March 7th and clube.com to get access to that event, as well as a newsletter, which I should also make a plug. Two things back to the Network Connect. Network Connect helped put this on, as well as Lessons from the Garage, which is kind of a sub-brand of the Network Connect. And Network Connect runs events, and there's a newsletter there from their website that you can find other access, other events that will be helpful on your fundraising journeys. And Alex, back to the guide on the fishing trips as well as the fundraising. It's good to have a guide. Hence, you should go to the Network Connect events. You should go to Lessons from the Garage, and you should go to clube.com. All right, get traction with potential investors before having clinical data when you have a med device. Okay, good question. And that goes back to one that came earlier, which is finding an investor. It's kind of the same question. Finding an investor in your space starts by, okay, who are the investors in your space? They're out there. You just need to identify them. Secondly, and then I say your space, meaning your industry. Secondly is, what's the stage? You can't go after a later stage med device implantable that likes your category if you're earlier stage. So you got to find one who is not only the category, but the stage, and preferably one that has invested in the upper Midwest before, assuming that you're here. And in this instance, I know that this gentleman's here. But if you want somebody to invest in the Midwest, then hopefully they have before. It's getting a little easier to do that. You're seeing outside money coming into Minnesota now. You're seeing folks harvesting or trying to harvest Minnesota from other markets. So it's better than ever. And so I'd encourage you to just keep hunting and carve out a little time each day. Again, whether it's a half hour, or 2 hours, but those folks are out there, and it's just your job to find them. All right, Mr. Sidekick, what's your name? Since we're going to do more of these. Oh, by the way, let me talk about that for just a moment. And then while I'm doing that, why don't you think about what we have to give you a name? Are we going to call you by your first name? Are we going to give you a sidekick name like, Batman and Robin? Or
we could go by my Christian name.
What is your Christian name?
Dogface.
Dogface. All righty. Dogface. All right.
Saint Dogface.
Saint Dogface. All right. Mr. Saint Dogface. We are going to try to, through the Lessons from the Garage, do webinars on the second Tuesday of each month. There's an occasional ones off of that, but I look at the next couple and I know it's the second Tuesday. So March 12th, we're going to do patents with Schwegman, Lundberg, Woosner. April 9th, we're going to do selling your business through Sunbelt. We're going to back to the investors on May 14th. And June 11th, we are going to be talking about how to do business in China. More information with all these things will be sent out there via email and or where to find us. Okay, so it's going to be St. Dogface. That's going to be
I
your.
don't know. I think we should be open. Susan says she likes the idea of a sidekick name.
Okay.
We should be open to suggestions, I suppose.
All right, so here's what we're going to do. There's going to be a prize. I'm sure it's going to be extremely valuable. But whoever gets the best name submission by our March 12th webinar, sidekick here. Today it's St. Dogface, but by March 12th, we're going to have a winner chicken dinner and complete with a wonderful prize. And we hope to have multiple submissions. Susan, we're going to expect that you get your Cracker Jack staff working on this, all of your people and that large staff of yours working on this challenge. Okay, we still have a couple of more minutes. I can get into some other kind of questions, but Tech Lad.
A little old for that.
Okay.
But we'll put it in the hopper and we'll see.
Okay. All right. Let's see. Let's go back to valuations for a minute, since that came up a couple of times. Just to chime in, yes, Susan and other people out there, that is one of the first questions. And I think that it's there to dismiss a transaction. And it also is, let's say you're priced inappropriately, then now I have to spend my mental energy trying to educate you, as well as frankly being the bad person, bad guy in this case, to try to explain how that works and to get beat up by the entrepreneur. And likewise, if ultimately the institutional investor ends up investing, but the valuation is off what was set by the entrepreneur in terms of expectations with their investors. And now everybody hates the venture person and people get called names like vulture capitalists and so forth. So on the valuation, I think lots of times that pricing that doesn't work is actually on the back of the entrepreneur. The entrepreneur got bad advice. The entrepreneur got a little greedy. Entrepreneur got a little too forward. And I would encourage the fundraising exercise to be one more as a partnership with the investor, because everybody has to win. Everybody has to do well. And the entrepreneur, by placing an exaggerated valuation on themselves, really, frankly, made their own mistake. And that shows up then with the investors not liking what is put in front of them, as well as a lot of pushback. And maybe an investor might have even been a good fit, but that investor dismissed the opportunity because it just was too far out of whack relative to what they should be pricing their deal for the stage that they're currently at. So I think that's an important part on the valuation. And let's see, Mr. Sidekick, did you have other questions?
Yeah, there's a couple of things I'd like to try here. Seeing
Yes.
as this is the first one.
This is the first one.
It's inaugural. It's very casual. I want to see if I have fixed the tech problem.
Oh, all right.
May I?
You may.
Hang on. I'll know real fast.
The best lessons in life are often learned outside of the classroom. That's where all the action happens. That's where the rubber meets the road and the hard knocks knock some sense into you. But did you ever wish you could get those lessons without all the fuss? Sign up today and get your first week free. You can cancel at any time.
righty, so we are all working. So the technical difficulties that we had are behind us, and we are good to go.
Talk about a little bit about Schwegman and Lessons from the Garage.
Okay, so again, we started with Lessons from the Garage. This is a branded exercise here with our webinar and our series of webinars. Lessons from the Garage, again, is your host for today. And think of it as a Netflix for entrepreneurs and decision makers. It's a how-to library. Right now, we're in the low 200s and expect to be 300 titles by the end of the year. You, as a webinar participant, have a bonus to connect up with the experts in the Lessons from the Garage. So go to either the Network Connect or lessonsfromthegarage.com, and you can sign up for a 7-day free trial. You can also follow Lessons from the Garage on Facebook, Twitter, LinkedIn, and Instagram. And then lastly, the next webinar is March 12th. Second Tuesday, put on by Schwegman Lumberg Woosner, who's our sponsor today and has been an ongoing sponsor of the Network Connect and now Lessons from the Garage. Website for Schwegman Lumberg Woosner is slwip.com, slwip.com. Let's see, what else? We're pushing up on the 5 o'clock. We got one last question popping in here. Do you wait for the market to dictate or risk underpricing? Isn't discovery just part of the game? Okay, good question. Thank you for that question. It's a couple things. All right, well, what is the risk of overpricing? Risk of overpricing is you get dismissed and you never even get to first base. So that's bad. So a lot of risk in overpricing. Risk in underpricing. You have more dilution than you otherwise would have planned. Okay, well, you can make that ground up in a couple of things, a couple of ways. Number one, lots of times there's an option pool, and lots of times that option pool can be divvied up to the key members in the team who do what they're supposed to do. So if your business has success and you grow and you do what you're supposed to do and hit the milestones you're supposed to hit, you can make up some of that ground with underpricing. Likewise, you could get in a bidding environment where you have multiple offers. So the risk of underpricing is far less and not as damaging as overpricing. In terms of the market dictating, I guess in a perfect world, that's probably the way to go. So you don't price it and you let the market dictate. With that said, if you're trying to raise money from angels, to some extent, you need to lead them. And so you need to dictate the price. So kind of depends on what you're trying to do. You're going to angels, you're going to venture sophisticated investors. And then I would be a fan of, given the choice, the risk of overpricing versus the risk of underpricing. Personally, I would bet my money, my shares, and my future on the underpricing and then deal with that as something going forward. All right, so I see 5 o'clock. We will push out to you email on how to access these presentations, how to sign up for the next webinar, how to find Schwegman Lumberg Woosner. Don't forget clubby.com and that March 7th event on the crowdfunding. And also don't forget to go to the Network Connect to sign up for their newsletter. And last but not least, one last plug for Lessons from the Garage. You can try it out for a week, nothing to lose. We're already seeing some fun feedback come in here. So thank you all for being here. Last thing on the Lessons for the Garage, you also can access the people who are making these videos. Over 200 will be 300 by the end of the month. Thank you all for being here, and we will be in touch. Drive safe.